Hey, this is Chris Creekmore Realty Group at the coast of North Carolina. Creekmore Realty Group is brokered by eXp Realty. And hot topic right now is interest rates. And I wanted to have Diana Johns join us on this about 20-minute webinar to talk about interest rates and to talk about uh, where were they, where are they, and where are they projected to be, and a seller and buyer tool called an interest rate buy down that is very popular right now. So thank you, those who are watching this webinar. We hope that it'll be informative to you. And I want to introduce Diana Johns. I've been working with Diana for many years. She is, bar none, one of the best and creative and responsive and just knowledgeable uh, brokers, lenders that you'll ever find. So, Diana, thanks for joining us. If you would quickly just tell us a little bit about yourself and your history.
Well, good morning, everyone. My name is Diana Johns. I am working with Primis Mortgage. I have been in the industry over 20 years. Have been working with the Creekmore team for many years and just absolutely love what I do. And today I just wanted to share with you some information that may be helpful, especially when you're looking at properties and you're looking at interest rates and you're on the fence right now. So I wanted to kind of share some good information with you to hopefully bring you over that fence and help you make a good decision. Just want to talk about the rates. Back in 1980, rates were at 13.74%. That was the average rate. Jumping all the way to 1997, they were at 7.6%. Today, obviously, we're at 6.75. We did have a very low interest rate time during the pandemic. I don't believe those times will ever come back again. So right now, the average interest rate right now is sitting right at about 6.75.
So
So I
we're
want to share,
looking at is that the blue, this line, or is it this
yeah,
line?
it's basically the blue line, the 6.75 at the
Okay.
very
All right.
top 6.75 rate. Okay. So I want to share with you what the predictions are by various different companies. So right now, rates are at 6.75. Okay. Um, Fannie Mae expects rates to end in 2025 at 6.4 and 2026 at 6%. The Mortgage Bankers Association forecasts average rates around mid sixes through to 2025 and gradually easing to 6.4 in 2026. The National Association of Home Builders anticipates an average rate of 6.7 through 2025 and 6.3 in 2026, dropping below 6% by late 2026. The National Associations of Realtors projects an average of 6.7 in the second half of 25 and 6% in 2026. Zillow forecasts rates to remain in the mid sixes through 2025, and those are pretty much all the projections right now. Excuse me. Home price appreciation is
Can I,
slowing
let me,
somewhat.
let me pause. Let me pause
Okay.
here real quick. All right. So even at best case scenario through 2026, we don't see interest rates getting lower than the upper fives at best case scenario, correct?
Best case scenario, yes.
Yeah. So in general, we're looking at the low sixes, um, at most of the predictions are in the low sixes, correct?
Yep, that's
Yeah.
correct.
So let's establish that as we are thinking about a purchase moving forward. All right, thank you for that. And I cut you off. What were you going to talk about?
Well, I was going to talk about the home price appreciation. It
Okay.
is slowing a little bit. Okay. So while home prices are expected to continue rising, okay, the pace of appreciation is projected to slow down considerably in 25 and 26 compared to recent years. Obviously, home prices really appreciated, and there's been a little bit of a slowdown when it comes to that. So, for example, Fannie Mae expects annual home price growth of 2.8 through 2025, so still an appreciation, and 1.1 in 2026. So if prices are still going to continue to climb, um, why wait? Why wait? And
Right.
that brings us into obviously uh, some information in reference to that would both be advantageous to both buyers and sellers, which is actually interest rate buydowns.
So this is a tool that sellers can use to gain interest in their property, or a buyer can use to negotiate an offer to get a better interest rate and not sit on the sidelines because you're waiting for the interest rates to come down. Um, so let's give an example. This is awesome. So we've got a couple examples, and let's talk about the different buy down options that the seller can use or the buyer can negotiate. And as a veteran of the real estate industry, been doing this for a little over 30 years now. Uh, we will help you show you how to negotiate it into your offer if we were representing you as a buyer, and certainly how we would present this if we were representing the seller as a an incentive to purchase now versus waiting. Okay, so excellent. So let's talk about the three different kinds of buy downs. You have a 3-2-1, a 2-1, and a 1-0 buy down. Let's talk about that.
Okay, so basically, I just created a couple of examples. The first one being a sales price of 549.5, customer putting 20% down, the current rate at 6.75. Okay, so let's say a seller is willing to negotiate one of these buy downs. So there's obviously three options. The 3-2-1 buy down obviously is a little bit more costly for the seller. Okay, the
Oh,
three
yeah,
two one buy down. Go ahead.
let's back up. The buyer cannot pay these fees, correct?
That is correct. The buyer
Only
cannot
the
pay.
seller can pay these fees. Very important.
Correct.
So,
It is
okay.
very important. So basically, taking that first example, let's say you wanted to negotiate you fell in love with this home, okay, and you waited for interest rates to come down. They're not coming down anytime soon. So Chris, for instance, has a house listed, and it's listed for 549.5. He can go back to the seller and negotiate an offer that you're basically making as a buyer, that you're interested either in a 3-2-1 buy down, 2-1 buy down, or a 1 year buy down. Okay, so what that actually means, the first year, okay, so it would cost, if Chris negotiated a 3-2-1 buy down, it would cost the seller 19,911.69 to buy to do basically cover the buy down. So in your first year, your rate would be at 3.75.
That's, I mean, you can't get a rate like that. So what that would be a massive incentive.
Massive incentive.
a massive incentive, right?
The second one, the second year, you would go to 4.75, still really, really good. And then the third year, you would basically go to your to the final rate. Okay. So
So
so there's 3 years, 5.75, and then on the fourth year you would be going to your 6.75 rate. So
all right, what?
the first year 3.75, second
Okay.
year would be the 4.75, 5.75, and then ultimately the 6.75. You have to qualify based on the today's rate. Okay, you still have to qualify based on today's rate. Now let's just assume that in year two, okay, you decide you're going to rates have come down. They've actually come down to the high fours, okay, and you want to go ahead and refinance, you can, because then you'll have the 4.75 for the remainder of the year. Just saying, okay. So what happens to the balance? Because this money, that 19,911.69, goes into an escrow account. Okay, every month as these payments are made, there's money taken out for your interest rate. Because you've basically the seller has paid for you to buy that down. So let's say year two, you still have money left in that escrow account and you decide to refinance. Okay, that money gets applied as a principal deduction when there's a payoff that's requested from the investor as a
So it
principal
does not go
deduction.
back to the seller
It
as
does
a
not go back to the seller, it stays with the buyer. Okay.
awesome.
The 2-1 buy down obviously is the most advantageous right now. I mean, a lot of from what I'm seeing, most sellers are more apt to doing the 2-1 versus the 3-2-1 buy down because it's a little less expensive, and hoping but by then, after the 2 years is up, where you get your 4.75 and the 5.75 rate, that rates are going to be at that level anyways, to where your average customer is going to refinance. Otherwise, he's going to be going to the 6.75. And then, of course, there's the 1 year buy down, which is the least expensive. You just have the 1 year rate reduction of 5.75. And of course, you can refinance at that point. But it's something that obviously your agent can negotiate with the sellers if you're interested in a house right now. And, based on these predictions that whether it's Fannie Mae, whether it's the uh, national real estate agencies, anybody that's making any kind of predictions right now, rates are still going to more than likely remain at 6% next year. So
So uh, excellent. So let's look at and then we'll talk about how you would potentially negotiate this as a buyer. Um, so here's an example of more expensive property, 525,000. So
725.5 on this property,
yeah.
with the 20% down. And again, same scenarios, 3.75, 4.75, 5.75. And obviously it's a little bit more costly. But if the seller is wanting to sell their property now, Chris could possibly negotiate that for a potential buyer. Uh, and I can give examples. You could reach out to me anytime if you're looking at a property and you want me to do some calculations for you. You can contact me anytime.
Yeah, yeah, and we'll make sure everybody has your contact information. And Diana has gratefully uh, given my team a kind of a chart so we can do a general calculation as well. So let's just say um, we negotiate an offer on a $725,000 house and interest rates come down. But let's say I want to put 50% down on the property, not 20%. So the calculations all change, but still the seller is still offering a 3-2-1. It's just how much it's going to cost that seller may vary depending on how much the buyer's putting down. Is that correct?
That's correct.
Okay. So if I was negotiating an offer on a 3-2-1 for my buyer, I basically would need to know how much they anticipate putting down before we negotiate that offer.
That's correct because it's based on the loan amount.
Right.
You know, it,
Right.
it shows the principal and interest payment with the buy down. See, I mean, look at the difference on this particular, just with the 20% down. You know, your principal and interest payment, was, if you just do at 6.75 today's rate, okay,
Mhm.
so the first year you're saving almost $1,000. Actually, a little bit over $1,000 for the first year. You know, if you take
That's
the three three
huge.
three 3,764.46 and your
Hmm.
principal and interest payment, so it's 1,076.54 that you're saving that first year per month. Okay, then it
Per
drops
month.
per month.
So you're basically saving $12,000, more than that.
It's $12,918.49. So it's basically showing you that annual subsidy on your monthly payment.
Yeah.
And the second year, of course, based on if you just finance it at 6.75, at 4.75, there's still a $736.82 difference on the second year, saving you an additional $8,841.87 just in the payments. And then, of course, 5.75, it's going to obviously go down a little bit, but you're still saving. So for a total of that 3-2-1 buy down, I mean, you're saving $26,289.23.
So let's say I've identified a property and it costs $725,000, and say that the property's been on the market for 18 days. Um, a little stale, but not too old. Average days on the market here are around 60 days right now at the coast of North Carolina. Um, it varies depending on the neighborhood and the community, but that's just general averages right now. So let's say I identified a $725,000 property and I'm willing to pay full price for that property with a 3-2-1 buy down. So that would cost the seller 26,289 if I was putting 20% down and if interest rates were currently at 6.75, right?
Correct.
All right.
Correct.
So I say to my buyer's agent, I would like to buy the property today, but I'm really worried about the interest rates. I don't know that I can afford this. And so your buyer's agent will say, hey, let's make a full price offer with a 3-2-1 buy down. So how does that contract look? So here's an example of a North Carolina contract. And so the purchase price is whatever it is, 725,000. This is, ignore the example on this one. But right here in our North Carolina contract, this is where we would put 26,000, what was the amount? 26,289. So we would put that amount into the contract. And then the seller, the first year, immediately would pay um, the 12,000. Well, they would pay all of it. It's just this 8,000 and 5,000 goes into escrow.
Correct.
And who holds that escrow?
The lender will hold the escrow.
Okay. All right. And it's drawn out every after every payment.
Correct.
So I would save almost 13,000 the first year, save almost 9,000 the second year, and $4,500 the third year,
Correct.
and pay $725 for a house today, and over a period of 3-year time save 26,000 and change.
Yes,
That's a pretty cool tool.
it is, and that's just obviously in the payments that you're. Look at the difference in payments. You know, principal and interest payment. First year, you're saving over $1,000 a month.
Yeah, yeah. So sellers that are watching this webinar, let's talk about making an incentive for your property if it's been sitting on the market. Contact Creekmore Realty Group. We'll talk about it. Buyers, you're interested in a piece of property, but interest rates are holding you back. We're skilled negotiators. I've been doing this for 30 years. Let's identify a property and put it in the offer. So and save some money. So I think this is a great tool, Diana. So happy you agreed to get on this webinar. This webinar is recorded so that people can see it. Let's just go over some questions just to make sure that we're not leaving anything uncovered. So buy downs when purchasing a second home, can you do that?
Yes, we can. Primis Mortgage, we expanded this program to allow for buy downs on second home purchases.
That's
So
a beach
Primis,
house.
Primis Mortgage, we do sell a majority of our loans, but these the buy down funds will go into an escrow account, and the investor has to hold that in an escrow account.
Okay, so the investor is who buys the loan.
Correct.
Okay, gotcha. All right. Does Fannie Mae buy your loans?
They do.
Okay.
We probably have a total of, I would say, probably 60 investors.
Okay. All right. So this is also just so the viewers know, this is why I work with Diana Johns. She has a great tool belt, if you will, of coming up with solutions to help you with your purchase. Diana's working with a lovely couple I've known for many years, and there were some hiccups in terms of what they could and could not do. And Diana, she's a problem solver. She worked through that. That's just an example. So is the buy down included in max seller concessions?
Yes, it is.
All right.
So I
So
gave you a chart on concessions as well.
okay. So all right. So on a conventional. All right. So talk about that. So we're talking about the
So if on a
yeah.
conventional, if the down payment is less than 10%, the max seller contributions cannot exceed 3%. So we have to kind of watch that a little bit, okay? And that's the sales price. On secondary homes, and it's basically primary and secondary homes. Now, if a client, let's say a buyer has more than 25% down, we can take full advantage of up to 9% of the purchase price in concessions. And then,
So
of course,
going back to this example right here at 725,
correct,
with 20% down, 6% is 43,000. So this is well below that
correct,
max. Yeah.
correct,
Okay. Very
correct.
good. Yeah.
And it works a little bit different with FHA 6%, VA 4%, USDA 6%.
Okay. All right.
So just wanted to kind of share that with you.
Does a contribution by the seller builder have to cover the entire buy down, or can the buyer cover any of that difference?
The buyer cannot use any of their funds for any buy downs. It
Okay.
must come from the seller, or if it's new construction, the builder.
Okay. All right. Excellent. Can the borrower refinance after the first year if the interest rates go down?
Buy down basically allows for that. Does not limit that a property cannot be sold or refinanced. Any remaining funds in the buy down escrow will be applied to the unpaid principal balance. And that would be obviously an advantage to a buyer also. I mean, it does not go back to the seller, it remains with the buyer. So, if Chris Creekmore and his team, they negotiate that for the buyer, it's a win-win for the buyer, and the seller will be able to sell their property with that buy down option, especially if it's been sitting for a little bit. It's a great, great program. So don't sit on the
Um,
fence. Rates are not going to be coming down anytime soon, and this is a great tool.
Great tool where you can save thousands of dollars if it's negotiated right. If you're the buyer, and certainly if you've got a property that's kind of stagnant, a little stale, and you want to give extra incentive to your potential buyers, it's a great tool to help put some buyers over the fence in making an offer. Diane, I think this is a great tool. This is an excellent webinar. Thank you for joining on this.
Well,
And
thank you for having me.
well, you are bar none our lead lender, so we love working with you.
Well, I
Uh,
appreciate that, and I love working with your team. And let's negotiate some of those listings and get this product out there because it's a great tool right now. Buyers get
um,
off the fence, sellers, let's help these buyers buy your homes.
So Diana John's contact information is in the description box below. Feel free to reach out to her. You also can subscribe to our YouTube um, at Creekmore Realty Group and call us. We'd love to help you um, with your listing or negotiate an offer. So thank you for joining. Thank you, Diana. And we're here for any of you. Just give us a call.
Thank you.